This conference will now be recorded.
Okay, good morning, everybody. This is Greg Morton. It is actually a Sunday, September 11th. I didn't update that slide. This is the weekend update for the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group for Canslim growth stock investors. So, as always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses. We want to learn first and only then invest. So today we're going to look at the M factor like we always do. What do we see this past week? Constructive action or destructive action? My hint is a bunch of question marks. Um, we'll look at we'll review it, we'll discuss it. We'll talk about some things to study this week and going forward as we analyze this market direction and try to figure out the appropriate exposure in light of what we're seeing. And then I'll mention our upcoming monthly meeting. So the M factor, as O'Neill teaches us, this is the most important letter in Canslim. We want to diagnose, we don't want to interpret, we don't want to predict. And to determine market direction, we want to look at three things in this order of priority, and this is getting important now. So first, what are the leading stocks doing? And I've been talking about the three Musketeers, and maybe we can see that they're adding a fourth now. So we'll talk about that. Actions of stocks owned, still a small group. Um, Overall, seems like about 50%. We'll look at it, percent invested. Market pulse, distribution day count, price and volume on the indexes, color and book tracking. Last weekend it was getting ugly. I meant to strike that out. This week, sort of teeter totter. So we'll look at that. So let's jump out of here and just go straight to the charts in MarketSmith. And let's get to the indexes. So here's the NASDAQ this week. So we had this really bad 7 days down. Things were looking really ugly last weekend. We lost all moving average lines. And then Wednesday, Thursday, and Friday started coming back, but the volume down here is just still anemic. And the traders are back after Labor Day holiday. So would have expected to see a little volume pick up supporting this price action more than that. So did come back above the 10-day and right at the 50 and 21-day. So this is going to be important to see what happens at the moving average lines. Of course, the real big one would be nice to get back above the 200, which is still way up here. Um, so you can see where we are. We're still 25% off the peak way back here, which was on November 22nd. This is putting us getting close to 10 months into this bear market. So average length's about 9 months. So this has now become a significant bear market for sure. And if we go to the weekly chart, I think I said last weekend, I've sort of redrawn the lines. This is, I think, pretty clearly the first leg down. I thought this was the second leg down right here. You can see where I drew it previously. But now that we have more evidence, this is actually the second leg down, I believe. So here we are. Question is, are we going to have a third leg down? We could go back and look at the financial crisis bear market, which ended in March of 2009. And to me, this one is kind of looking similar. It doesn't mean it's going to happen, but that one came down and barely undercut this last low when it ended. And if we come off this peak down to this second low, that's about a 20% drop. So if we go a little bit lower, 22, 25%, who knows, then maybe that would give us a third leg down and some, we haven't had capitulation selling, which is how most bear markets seem to have that at the end. So that's just something to watch for. Not saying that would happen. We could, stop here, go up, have a great rally, or we could come down and have this third leg, or we could just go sideways for a while with all the news that we're facing. So that's what we see there. Just that lack of volume is still sort of an issue. S&P 500, sort of the same, battling back to the 50 and 21, just came down through all those like a hot knife through butter. NYSE, you notice all these are about the same. Everything's moving in lockstep, so we're not really seeing any divergence. Same thing on the Dow, right back at the 50 and the 21 day, trying to battle back through those. Again, volume just still lackluster. Dog days of summer, volumes continuing a little bit. Russell, same thing, did get back above the 21-day. S&P 600, still those two are converging like on the other indexes. So just a lot of similarities in there for sure. And if we go look at the coloring book, um, still got a lot of red. This week we had distribution come in with clustering. That's the C, which means you have 4 in 8 days. So we had clustering on all three indexes. It was actually 4 in 7 trading days. Looking kind of bad. We had these rally days here on the first, which immediately failed pretty quickly. 2 days later, had new rally days on Wednesday. So technically, under O'Neill's system, we could have a follow-through day as soon as Monday, which would be right ahead of the CPI and the PPI numbers next week. And then we have Fed meeting coming up on the 20th and 21st. And there's still, seems like everybody's still talking about a 3/4 point hike, but that can change. We'll just see what happens on that. All the MMTS factors are still red. Window of opportunities closed. IBD is at yellow. You can see the column labels here at the bottom. New highs versus new lows. New lows have been dominating for a while, have a little bit creeping in on the NYSE. So we'll see what happens. My selling day versus, or my buying day versus selling days, I only have 6 buying days in the 25-day window and 13 selling days. So still looks like a sort of distribution dominant tape so far, but again, open to change. Can start changing if all that starts improving. Get a lot of green days this week. We'll see what happens. And let's go back over here. And if we look at the group teaching portfolio, yeah, 45% invested. I couldn't remember. Off 10.5% year to date. This week did, fortunately, made up a lot of the losses from the first week. That was a terrible first week of the trading period, and then kind of brought it back to just about break even. Only really have TAN, lithium, and TQQQ, and then a short position via puts in FREY. And we'll look at that in detail at our next meeting. I'm not going to cover that in one of these short weekend videos. So that's where we are there. Let's see, covered all of that. So let's go back over here. So as noted, most important things, the action of leading stocks and stocks setting up to be leading stocks. So the three Musketeers are the true market leaders right now. I think everybody pretty much agrees that these are the three potential true market leaders. Those leading and showing the most strength right now. Jim Ropel has mentioned these three when he spoke recently. In fact, he did a thing with Ali Coram that's on YouTube at the end of the day Friday under her stock sales series. So it's always worth listening to Jim, but I know he and Matt Caruso have both mentioned these three. So Enphase, Celsius, and Shockwave seem to be the three. So we have solar, retail, and medical groups where we're seeing these early leaders. So we want to see if we see some other leaders coming out of these groups. These are still okay for now. We're going to look at the charts in just a second. And then I said maybe they're adding a fourth, which seems to be maybe the lithium space. So we'll look at the leader in that. And then, some of the energy, oil, gas stocks, are they setting up to make another run? I'm not counting them as a musketeer yet, but just as we head into the winter season and natural gas, what's going to happen with oil prices, with the war, and what Putin's doing, and strategic petroleum reserve release ending, and OPEC saying they're going to defend the price of oil. There's just a lot of things in there. So maybe that area does something. Who knows? So let's look at the charts on those real quick. So here's those three. Here's Enphase. You can see it sort of setting up. It was setting up a flat base. It couldn't wait the whole 5 weeks. You can see it's trading very tight. Strong earnings and sales. This one was a stage 1 base, so this would be a stage 2 base, which again, it didn't even go the whole 5 weeks that we needed for a flat base. So now it's going to take at least 6 weeks for it to form a full and proper base. But it obviously, relative strength line's nice, triple digit earnings and sales, has fund ownership, is liquid, trades over 1 billion per day. So just a strong one. I think this one's acting the best of the three Musketeers. Shockwave, nice big gap up there, just nicely consolidating after that big gap. So it's holding. Celsius pulled back right to the 50-day, which people that were in it, maybe if they had enough cushion. I'm sorry, that's the 10-week. We're on the weekly. So pulled back right and touched that and came off of it. So that one's looking constructive again. You just see the RS lines showing us that these are leaders. And then also sort of in the solar sector, I know TAN's an ETF, but it's behaving okay, and of course has exposure to phase and Solar Edge, and you can look on the ETF site and see what's all's in there. And then here's lithium. So this one this week went to an all-time high, is a recent IPO. So it's acting constructive, has base on base. So continue to watch it. Had nice strong, got the little balloon volume. So that one, and then there's some cousin stocks in that space. There's only really three to even look at in this space, which are lithium, Albemarle, ALB, and the other one, which I can't pronounce, but the ticker is SQM. So those are the three in that space. Let's look, just put them in real quick. So there's Albemarle. So it's good, extended. Same thing, came out of a first stage base, a deep handle. How deep was that handle? Yeah, 31%. Wow, way above the 11 or 13% that we sort of look for, but um, acting well, but that's still not as constructive overall as the chart on Livent. And then SQM is the other one. So these last two were both affected by the recent vote they had in Chile, which I think made the chance of the companies being nationalized decrease, because these have mining operations in Chile. So that was sort of news driven, some of this recent strength. And then a couple of the oil stocks just to watch to see if they're setting up. You have a couple with handle there on PXD, Devon. There are so many. I mean, if you just go through the IBD 50 this weekend, you'll see a ton of oil stocks in there. So what are they going to do? These are stage 3 bases on some of them, so you have to keep an eye on that. But that's sort of another area to watch. And then we're just looking for, other areas to come out. So we looked at those. Current market thoughts, things to look for. Of course, we go back to that 8-minute Jackson Hole speech by Powell where he talked about there was going to be a pain. So that really drove those 7 days down on the NASDAQ that we were looking at. Things were still very ugly at the start of this week, but then we made some progress without volume, as I mentioned, and not a lot of new setups yet. I mean, we saw old names bouncing. This recent upside was not driven by the new names necessarily. So was this just a dead cat bounce or short covering this week? I think it was until proven otherwise. So if we see some institutional support and big money support accumulation come in, then that'll be great. And then this week brings the CPI on Tuesday, PPI on Wednesday, and then the Fed meeting is not too far off on September 21st. And then QT is supposed to double. I have that on another slide. I'll come back to that. So current market view, the MMTS are still red. Window of opportunities closed. IBD still yellow at uptrend under pressure. Selling days are outweighing buy days. New lows each day are still outweighing new highs for the most part. If we're in a strong market like Matt Caruso talks about, we expect to see more new highs each day than new lows. So current signs for me, if I do that one summary picture slide each weekend, just question marks. Waiting to see. Can't predict. Could go up, could go down. So need to study, watch. Do we get a follow through day? I put Tuesday. Actually, I think it's Monday. That was a mistake. Sorry. when I looked at the coloring book. So based on when the rally day was, it can happen on the fourth day. So I think the rally day was Wednesday. So it'll be Wednesday, Thursday, Friday, Monday. Yep. Does the window of opportunity open? Um, are we going to see MMTS signal changes coming off of red in the coloring book? Some of those are close. If we have another strong day, some of those will flip up to yellow or maybe even green. Do we start seeing more new highs each day than lows? These are just things that all go into the calculation. What do the indexes do at the moving average lines? Are they going to strongly retake, the 10, 21, 50? And then we still have the 200-day looming out there. And then do we see leading Canslim stocks setting up and breaking out? So our weekend routine really matters right now. I mean, it matters every weekend, but it's really important. So I think we're a little bit like the Fed. Everything's data dependent, and that's probably true all the time, but it's really brought into focus now. So if we get improvement in the M, have strong Canslim stocks breaking out of full and proper bases, or presenting early alternative entries, then we'll be easing back on the gas pedal. If it goes the other way, then coasting or even breaking some, which means less exposure. So Canslim's designed to pull us into good markets and push us out of the bad, dangerous ones. So speaking of the Fed, we do have the double whammy right now of massive rate cuts and quantitative tightening at the same time. I don't believe we've ever had those together, certainly not as extensive as they are right now. So the quantitative tightening per the Fed is supposed to be 30 billion per month coming off the balance sheet. And this is done by not reinvesting assets, but you would assume there's at least that much coming in maturing each month, and a 17.5 billion reduction in mortgage-backed security for 3 months. So that was supposed to be June, July, and August. And then it all doubles starting now in September. It's supposed to go to 60 billion per month coming off the balance sheet and 35 billion per month coming off mortgage-backed securities. What's this going to do? Never have had this 1-2 punch before. And just so you know, so for the first 3 months, they got pretty close to taking the 90 billion. They really ramped it up in August. And so it ended up being like, I don't know, 88 billion that came off the, I'm sorry, 58 billion. No, 30, 60, 90. Yeah, 88 billion that came off over that 3 months. But they did zero in mortgage-backed security reductions. In fact, these went up a little bit over the 3-month period. So when we talk about all that doubling, this one, per the data on the Fed site, and nobody's talking about it, but they just whiffed on it. They didn't do it. So we'll see what September looks like. And normally we look at my spreadsheet on what the Fed's doing at our monthly meetings. So speaking of those, our next meeting, it was supposed to be Tuesday, but the Fed meeting's that Wednesday. So I don't want to meet on the eve of the Fed press release. I'd much rather meet after that's happened so we at least can talk about it. So I'm going to switch that to Wednesday. I haven't even done it on the meetup site yet. I just decided to do it. That's where you register. Tuition's $12. So you can attend live, but you do not have to attend live. And everybody gets a recording, slide deck, and then I send out normally links to several different things that we talk about during the meeting that might be helpful. If you haven't attended one of our meetings before, I send you a courtesy copy of the prior month's meeting, recording, slide deck, all the links. So this is what we covered in August. September will be similar. We'll look at the IBD nuggets. We'll look at the TML, the three Musketeer list, see if it's 4 stocks owned. We'll look at any IPOs if there's any of those to study. I am going to do a segment on short selling, which we'll talk about a little bit, which we really haven't covered or dealt with before, and a little bit different perspective on it than we might expect from the standard O'Neill book. And then again, IPOs, and I'll have some educational topics like these that we add in. So here's a list of prior meetings. People can order these. If you don't have a set of written sell rules, this is really a helpful 3, I think. And if you struggle with what a weekend routine's supposed to look like or could look like, you might find some things to add into yours out of this. I covered that in September and October. So people can reach out to me at this email address and I can send you the list of those and how to order them. Those are $15 for the prior meetings. Here's the meetup site. Greenville East Side's the one with IBD, and then the Stockyard is the one to where you RSVP for the upcoming meeting. And then, of course, you're on the YouTube page, and you can follow me on Twitter. So that's it. Hope you have a great weekend routine. I'm out of here. See you next weekend.